What is going on, investors? Hopefully, guys are doing well out there. It is time to talk about Intel Corporation, ticker symbol INTC. The company just reported their Q4 earnings. We'll get into them. We'll take a look at the revenues, the profits, the slow growth that you're seeing over at Intel. And that is why when you look at the stock chart of this, while it is in the upward direction over the last several years, more recently, over the last 3 or 4 years, this stock has actually more or less gone sideways. Over the last year, stock's down 8%, but we've been as high as about $68 per share and as low as about $47 per share. In the after hours, the stock is down 2%, but I tell you what, we've seen stocks go up and down so fast over the last few days. I wouldn't really put a lot of stock into that. We'll look at this from a technical perspective, though. As you can imagine, when you're sideways consolidating, there's areas where you can buy this one, and there's areas where you could potentially sell this one as well. Now, the big news with Intel, before we get into these numbers, I want to talk about this first, okay? Intel is pledging to spend over 20, they say at least, that means over $20 billion on a chip manufacturing plant in Ohio. Now, as an American, I don't live anywhere close to Ohio, but I gotta imagine this is absolutely fantastic for this state. This is on a 1,000 acre site, which could expand to about 2,000 acres and build up to 8 fabs on that. That is fantastic for the state of Ohio, and I think for America as well, starting to build these chips here. As a shareholder of Intel, you have to think, oh my gosh, $20 billion, and we did $80 billion in revenue, not profits. We did $80 billion in revenue, and we're going to spend $20 billion on a chip manufacturing plant, which construction will begin this year, which means money will start flowing out of this company to build this plant, and we will not see an operational by 2025, and that's if all things go well. As I understand it, building these fabs is not only incredibly expensive, but it's very complex and very difficult, and having it be on time would probably be a small miracle. Now, Intel actually previously announced another $20 billion investment to build 2 fabs in Arizona. So we've got a $20 billion fab in Ohio coming in line sometime in 2025, and we got 2 fabs in Arizona coming online at some point, another $20 billion. I'll remind you, we just did $80 billion in revenue. We did $19 billion in operating profit, and we're going to dust off $40 billion, over $40 billion just to invest. That is because Taiwan Semiconductor Manufacturer, ticker symbol TSM, which has blown past the industry for the most part in terms of their capabilities. They're investing about $12 billion to build a semiconductor plant in the state of Arizona, along with Samsung. They're going to build a $17 billion chip plant in Texas. Micron and Texas Instruments also building similar fabs in New York. This is an investment phase for these companies, and if they can't match it with revenue growth, which I don't necessarily think Intel's going to be able to do, where you're going to blow up these earnings, which we'll talk about here in a second. Now, the company did have the confidence, though, to raise their dividend by 5% to 0.365. I tell you what, if I was a shareholder of Intel, I'm a shareholder of AMD, I'm a shareholder of NVIDIA, well, if I was Intel, I would scoop this dividend out and just pour it into the chip fabs, but the company believes that that is something that shareholders still want. Now, we've got the last 3 months ended here. We've got our most recent quarter here on the left-hand column. We've got our 12 months ended on the 2 right-hand column. Our most recent year is here, kind of the third column. So we've got our net revenues of $20.5 billion. That's in a quarter. I want to remind you that this company is pledging basically 2 quarters of revenue, not 2 quarters of profit. They're basically pledging 2 years of operating profit to build new fabs, and that's on the low end of what that's going to build. Woo, that is going to be expensive. We got cost of sales on that $20.5 billion of $9.5 billion. That gives us gross margin in the most recent quarter at $11 billion flat. Now, what I noticed is it looked like margins compressed. Take a look. Last year, we had $19.978 billion worth of revenue, and our margin was actually higher. So we actually made $11.35 billion in gross margin on lower revenues. It's really strange to me. In a chip supply shortage, in an inflationary environment, the fact that your margins compressed over at Intel, it has me concerned a little bit, okay? Because you'd expect with a, quote, chip shortage, with inflation, you would actually expect margins to expand. So it's telling me their products might not be that great. it might, first of all, you see it on this revenue growth side. Over the last 3 months, you went from just 19.9, really rounded up to $20 billion to just 20.5. And again, your margins actually compressed over at Intel. We got research and development coming in at $4 billion. That's up quite considerably over the previous year. You got marketing, selling, and general administrative. That is also up. So your operating expenses went up by about $600 million. They went from 5.4 up to about $6 billion. You got operating income coming in at south of $5 billion when last year on lower revenue, I want to emphasize on lower revenue, you had higher gross profit and you had higher operating income. That is a problem. And if Intel cannot turn that around, that is also why this stock is basically stuck in neutral as well. Because when you pull up at the financials of AMD, you pull up the financials of NVIDIA. Look, I don't care what these chips do, whether one's better or the other. All I am telling you is I'm looking at these financials and AMD's and NVIDIA's are way better. Their chips might be better. I don't know. I just know their financials and their gross margins and their gross profits and their operating income are way better than this, not to mention the top line growth. Take a look at this. Holds true for the last 12 months, okay? We've got a little bit of acceleration on this net revenue side, but our margins stayed the same, which shows you that they actually compressed because you went up by roughly $1.4 billion on that revenue side, but your gross margins basically are the same from a rounding perspective. That means those compressed. And then from an operating income side, because our operating expenses went up quite a bit, our operating income just like really shriveled up, went from 23 billion down to 19.5. And then you want to factor in that we're going to go dust off $20 billion on some manufacturing plants. These financials could get incredibly ugly, at least from an operating profit perspective. From a balance sheet perspective, you're going to wonder where's the 20 billion coming from? They're going to have to lever up this balance sheet one way or another. Right now, you have 21 billion in trading assets, another 6 billion, 6.9 billion in cash. So they have a fair amount of cash, but we're talking about a massive investment over several years. And when we look at this company from a cash flow perspective as well, it doesn't paint the most glorious picture, as you can imagine, as margins are starting to compress. We've got some debt here. We've got 33 billion. It's basically flat year over year. We'll see that on cash flow. So we come down here to cash flows. We got our 12 months ended. We pull down this net income, which is actually lower year over year. This is what I'm talking about with Intel. We're moving into a big investment capital expenditure phase, and our net income is actually going down. It's going from 20.9 down to 19.9. Essentially flat from kind of a rounding perspective, but doesn't make me super excited about what these financials are going to look like in the coming years. You really got to look far into the future with Intel. Once these fabs are built, maybe their profit margins and their ability to deliver for customers could end up turning around. We've got our net cash provided by operating activities essentially fell off a cliff. You went from 35 billion down to just 29 billion. Again, this is for a full year. You've got positive cash flows of just $29 billion. That is clearly going to get blown up over the next couple of years because here's your addition to property, plant, and equipment. It went from 14.3 billion last year up to about $18.8 billion. That is likely and almost assuredly going to continue to accelerate. When you factor in the other operating activities, you had negative cash flow out of that side. We haven't even gotten to financing activities yet, but that was negative 25 billion. So on positive cash flows of 29 billion, you had negative investing activities at $25 billion. Then we come down here to our financing activities. You issued some long-term debt, about $5 billion. You repaid about half of it, so you essentially refinanced it. The executives are going to take home $1 billion in terms of their stock options. You did repurchase some stock. I don't know why they're doing that over at Intel. $2.4 billion. I would probably save this money because this money is going to need to be poured into here. And you also paid dividends to shareholders of about $5.6 billion. We're talking about $7-8 billion gone to share purchases and dividends, and you look at the stock over the last 12 months and it's literally gone nowhere. So I'm not exactly sure investors really care about the dividend or the repurchases. Now, if they didn't have a dividend, certainly if they cut it and if they weren't repurchasing shares, maybe the shares would be going lower, but you would have about $8 billion that you could funnel into the absolutely expensive fabs that you're planning to build over in Ohio and Arizona. Now let's take a look at Intel from a technical perspective. You've got a longer term uptrend on this one, believe it or not, going all the way back to 2013 is way back here. I've got this kind of like purplish line right here that's kind of in this uptrend. The stock's locked in an uptrend, okay? It's making a long series of higher lows. That is extraordinarily bullish, and it really would not be broken unless you got below about 40, I'll even call it like $40 per share. You put a big red candle and you get down here to $40 per share, that will take out this upper trend line. That's positive news for investors. Now, in the shorter term, we're simply stuck in a range. We're stuck between about $44. There's a strong area of support, which is literally held for almost 4 years now at $44. If Intel stock breaks $44 per share, it would be a disaster from a technical perspective. It has held that level for 4 years. If and when Intel stock pulls back to $44 per share, that is seen as a buying opportunity. Now, the opposite is true. We have a pretty hard level of support up here at about $57 per share. Depending on where you want to draw this in, it could be as high as $60 per share. Yes, there are candles up above it, but anytime we've gotten above $60 per share, the sellers have materialized, more specifically closer to $68 per share. You want to push this line all the way up to $68 per share. Yes, you should probably sell your shares of Intel if you want to take profits, because what has happened over the last 4 years, the stock has gone up to about $68 per share and crashed all the way back down here to $44, $45 per share. The stock's range bound, and my guess is based on the amount of investment that this company is going to need to do, the weakness that they have in terms of revenue growth and operating profits, that is going to weigh on these financials tremendously. That's why we go over these financials. So when you see these press releases where it's $20 billion, you can come here and understand the gravity, how this is going to impact the company. Because for 12 months, they had net income of $19.8 billion, and they showed in fact, that actually was decline year over year. So I don't think that's necessarily going to change, because we're in an environment where you've got a chip shortage, you've got all this demand for chips, and the net income at Intel over the last 12 months actually went down. That's a head scratcher, and now they're going to be investing heavily into chip manufacturing plants in Ohio and Arizona, really, in my opinion, just to keep pace with the competition. Intel could potentially and eventually be in tremendous amount of financial trouble. In the same breath, boy, if those plants work out for them, this could be a very strong buying opportunity. I want to remind you guys, this stock is in a long-term uptrend unless it breaks $44 per share. In the meantime, we're going sideways with Intel. Hopefully you guys enjoyed that video. We'll be back again soon with more. Good luck with your investments.